What's going on, everybody? Welcome back to my channel. In today's video, I'm going to show you guys how to do a calendar spread on Robinhood. This calendar spreads, in my opinion, are, they're one of the best strategies for option trading, and I use them all the time. Like this position right here that I just closed out 3 days ago for 121% return, and another position that I'm in right now over here which is up 55% so far. So, yeah, don't copy these trades right now because I have no idea when you guys are watching this. These are going to be used as examples. Nothing in this video is financial advice. It's all for informational purposes only. And I'm going to teach you guys how to set up a calendar spread, okay? So I'm kind of trying a new format with some of my videos where I'm going to go into trade examples and the strategies, and it's going to be explained in a little bit more detail. So it might be a little bit of a longer video. So make sure you do watch till the end to get the full value out of it, because I do want to show you guys exactly how the risk reward works on these. What are the ups and downs and things like that. So if you guys want these kind of tutorials more, please do hit that like button. And then also subscribe to my channel and hit the bell so you get notified of my future videos, okay? And drop me a comment below if you like these kind of videos that I go into more strategic stuff and kind of show you guys exactly what my thought process is with these trades. So without further ado, let's go ahead and get started. So the example that I'm going to use right now, I'm going to get back into this Apple trade that's up like 54% right now. I'm going to get into this in a little bit more detail later on in this video. But for the example of exactly how to set this up, we're going to use Google as the example today, okay? So say I'm looking at, so this is the Apple chart. Let me pull up Google. Say I'm bullish. I'm still bullish on Google, right? I feel like it's still got more room to run. The indicator I'm using over here, which I use for all of my trading, is Lux Algo Premium. If you guys want to check it out risk-free, link in the description below. If you guys don't want to check it out, no problem at all. This is all basic price action, okay? So basically, I was like looking at Google, and I'm in the middle of a Google trade right now too, which I'll show you guys. But this, I feel like, if I was still bullish on Google, I'm like, okay, there's some upside potential. What's the best way to optimize your risk to reward on an option strategy, right? And this is where the calendar spread comes in. Because basically what the calendar spread is, and let's pull up Google's option chain. So a calendar spread is basically, if you're bullish, right, you're going to go with the calls. If you're bearish, you're going to go with the puts. Okay. In this example, I'm going to say I'm bullish, for instance. Okay. And if I'm bullish on Google and I want to maximize my risk to reward, what I would do is I would sell a near time expiration option. So for instance, for this example, we're going to use, let's go ahead and use June 14th, okay? Because we've got 29 days to expiration on that, right? So what I would do is, in this example, I'm already in this position, so do not copy this because I don't know when you're watching this because I placed this trade a while ago. For instance, let's go ahead and use the 185 strike. So the first thing I would do is go into call, go into sell, pick my nearest expiration that I'm comfortable with. So let's do a month, give it some time to mature. And I'm going to sell a call option on this, okay? If I was just selling the call option, guess what? The maximum profit I could make is 131 per contract, and the max I could lose is unlimited because it could just skyrocket, all right? And I'd be completely out of luck, okay? Now, we're going to offset this sell with a purchase. And for the purchase, I like to go in about 2 weeks ahead of the option that I'm selling. So for this, let's go to June 28th, and we're going to do the exact same strike price of 185. But this time, we're going to click buy and go for the same strike price, different expiration of 185. You see how that graph just changed, right? And this is because the further out expiration, right, the 43 days till expiration option is going to decay a lot slower than the one that's near, right? Because the theta on this is 0.06. And then when you go out 2 weeks later, theta on this is 0.054, right? So the way you make money off of this is you want it to go in your direction to a certain point But one option is going to decay faster, which is the one that you sold that you collected premium on, and the one that you purchased is going to decay slower and is going to keep going up because of the delta. Okay. So that's why when you look at this, the max loss on this is $67. Your total cost per contract to do this play, now you've limited your risk. So instead of unlimited risk now, guess what? Your max loss is $68 and the max profit would be 250. Yeah, that's insane, right? When you look at the risk to reward percentage wise, right? This was a 300% gain on 100% loss, right? So at the max, if this starts going down, if by expiration Google is right where it doesn't move much, guess what? According to this, you've lost about $29. Okay? But if it starts going in your direction as time goes on, you can maximize the profits. You can get out early, you can get out late. You can always exit your strategies. And the way that I like to do my calendar spreads, depending on the cost, I will go ahead and I'll do a stop loss of about 50% and my take profit is 100% or more. This way, it's a 2-to-1 risk to reward, right? 50% loss, 100% profit, right? 2-to-1. And this way, I only have to be right more than a third of the time to be profitable. So even if I'm 50-50 on my trades, guess what? Long term, I'm very profitable, right? But this is it's a high probability trade because you're limiting your risk to a lot, right? So now, so that's how this trade kind of works out. Now let's go into option strat and set this up so you can kind of see as days go by where you want the stock to be and how much it actually decays and so on. So we're going to go into option strat when you first log on, right? And you can open up like a free account or whatnot. So it actually has an area where you can do a calendar call spread. Okay. So we're going to do the calendar call spread. Let's change this up. So we pick the 185 strike price, right? On the buy and the sell. Let's change the expirations. So this is the purchase, and the purchase that we chose was June 28th. All right, so that's already on June 28th. And the sell on this was 2 weeks earlier. So let's change that to June 14th, right? And again, so this is giving you similar stats, right? So the max loss would be $73, max profit would be 251. So you see how as time goes on, if Google stays right around where it's at, right? Or even if it dips a little bit, you're not getting that close to your max loss. Your max loss isn't going to happen for another 6 weeks, right? Or until the expiration of the first leg, the closest leg of the option trade. But as it starts moving up and time decay kicks in, you're making more and more and more and more. So even if it goes up a little bit and stays stagnant or goes up and down, you can still become profitable even when it moves very much in your favor and you can lock in your profits, right? And if it starts going down, it has to go down a decent amount for you to hit your 50% stop loss. So that's why like the risk to reward on this stuff, I really like it because it really, really helps out with the time decay for these options. So now let's go into the now let me show you guys. So when you're in the middle of one of these trades, how does Robinhood kind of make it easy for you guys to kind of look at what your risk to reward kind of is moving forward as well. So for instance, so this is the strategy that I was using, and this is on Apple. Because when I was looking at Apple in my Lux Algo premium suite, right? Where's Apple? There we go. Right. So this trade I got into 429. So this one that I'm showing you guys right here that I posted in my Patreon. So again, if you guys want to know exactly what I'm trading, check out my All Access Patreon. I've got a link to it in the description below where I post all the trades that I take on a daily basis and also my market insights and stuff like that. So yeah, check it out if you guys like. So I got into this trade 429, which was right around this time, right? because there was positive there was a positive convergence right here. There's also money flow. The negative money flow was lessening down. So I got in. This was great. I got out a little bit later. And then I opened up a new trade. And this trade on the 195 call, the calendar spread, I placed this on May 9th. Okay. I got into that trade right when Apple started moving up, and then there was a pullback, but price was still over the Neo Cloud, and the Smart Trail was still blue, and the money flow was still, was well below, uh, you know, the threshold, and it was moving positive, so I liked it. So I got into this trade right around here. It's still profitable. Now money flows turn into positive money flow, and this shows strength in the trend. So I'm still pretty positive that I'm going to stay in this trade for a little bit longer. So with this, I'm at about a 49-50% uh, profit right now, but I'm still going to hang on to it a little bit longer. So a button that Robinhood has introduced that I think is super, super helpful is the simulate my returns. Okay. In this, with the strategies that you have, it will give you an estimate of, okay, if the price stays right where Apple is right now, and right now I am about 36 days to expiration, right? DTE means days to expiration. If it stays around the same price, right? And as the days to expiration gets closer and closer, you see how that simulator returns, the profit keeps going up, right? And if the price starts going up, you see how all of this changes and your profit margins just skyrocket as you get closer to expiration, because that's when a lot of that time decay kicks in, and the shorter leg is expiring quicker and quicker and quicker while you're banking on that premium that you've collected. And when the price moving up, the longer leg is appreciated, but it's not depreciating as much in value because it's got a lot more time decay left in it because it's a later expiration date. So with a trade like this one actually maxes out it's going to max out at your strike price that you did the trade on. So these are the 195 calls that I did. So if I stay onto this trade and if it's around 195 by the time of expiration, this could make almost $1,300 with a 400 and some, what was it, like 400 and yeah, with a $475 investment, right? But I'll probably get out a lot earlier than that. I'm going to lock in my profits at around 100%, a little bit more than 100%. So that's why with it being up 55%, I'm still in it because there's still a lot more room to run. And again, when you go into the simulated, if it goes down, if Apple starts going down, it's at 189.80 as of the time of this recording, right? Even if it goes down, right, to 186, as time approaches, I'm still in the profit for a while until it gets closer to expiration, right? So there's still a lot more room for it to run, and it could even go down. And this trade right now that I'm in could still end up being profitable. So now it's just a matter of time to just hang tight, be patient, and wait for the profits to come in, right? So that's basically how you do a calendar spread. If you were going to do a put spread, it would be the opposite. You'd do a put instead of a call if you were bearish on a trade. And then there's another trade that I really like, which is called a double calendar spread. Okay. I'll make a video about that soon too. So if you guys want to check out that video, make sure you comment requesting it, and also hit that like button. The more likes I get on these videos that are more explanations and going into more detail, motivates me to make more videos for you guys. So make sure you hit that like button, subscribe. And then of course, if you guys want to see the trades that I'm making, check out my all access Patreon, link in the description below. And for my charting, I use LuxAlgo. You guys want to give them a try, 30-day risk free. I've got a link to them in the link with a link in the description below as well. All right. I'll see you guys on the next one.